What is up, everyone? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we are going to dive into a chart, one single chart, so I can teach you something. This is going to be a teaching point that is not meant to be construed as financial advice. However, it is something that hopefully you can use as a learning tool to help you making your own collector decisions. So in today's chart, we're going to be looking at the Emperor's Fist, Darth Vader, sitting right over there. That's backwards. All right. And there is something on this chart that I want to point out that you could use. A couple things that I'll point out. There are two different indicators. There's one thing that gives us a clue as far as the price action, the candlesticks, and then there's another indicator that gives us a clue to know where we are in the cycle of this item and maybe even overall in the VeVe market. Okay, so first of all, I bought this one on the drop. I got lucky enough to get it on the drop. And then I bought the common and the uncommon on the market for around 100 gems, and they're half of that now. But buying this one on the drop for, what was it, 80, I think it was 80 bucks, and then watching it soar to over $3,000. Boy, that was a fun time. I should have gotten rid of it back then, but hey, who knew that we were going to be running into a bear market? But after coming out of the box, we noticed that we have this formation that's right here, and this is called a pennant. Okay, so during a bull market, whenever you have a formation that looks like this, you best believe that by the time you get to the end of this pennant, you blow straight out the top of the point to the upside. And after we came out of the top of that, this was the market cycle peak right there. And then after that, we go into distribution mode. So we have this long trip downwards in distribution as the price gets less and less volatile until we reach a bottom, and then we look for a clue to help determine if we have experienced a bottom. Now, my best guess is that we have a bottom in on this item. Now, I could be wrong. Something could happen and we could continue downward, but for now, I'm going to show you why I think we're at a bottom. I look for distribution to end and for a smiley face to show up. Or when you connect the dots at the bottoms, you get something like this. Let's put the nose and the eyes. And so there's your little smiley face right there. Okay, so whenever you can find a smiley face, you may have a bottom. Now, I would say that based on the data in front of us, right there, there's your bottom. Right there. So we're looking at the price point of, let's see here, what was the price at this point in time? 530 bucks possibly was the bottom for this item. Now, as you're making decisions on when to sell and swing trading, like me, I'm a swing trader. I was thinking about unloading this one and picking it back up as the price sinks down further. But I made a decision that I can't do that with this item. And here's why. If this is the bottom and we are trending upwards right now, we have another indication on this particular chart, and it would be the tricks indicator. That's right there. So when we turn on the tricks, that's funny. This is a set of oscillators that's similar to a stochastic. I look for volatility and crossovers of the tricks oscillator to let me know where we are. So when this oscillator first starts to print, because it didn't print back here where I'm covering it up, but there's nothing behind my video window, we see that during the distribution phase, as we're sailing downward, we have a steep angle here. But then we have our first crossover right there, and it starts to move up. And so that coincides with this little pop up and movement to this little pop. But then we notice we went down again. So we continue down, sinking, bleeding down, while the trick stayed flat. Okay, and then we had a divergence of the fast and the slow line, where the white one is on top and the orange one is on the bottom. And that coincides with this little pop in price here. Okay, see that? But then we settled back down again and the tricks went flat. So here we are flat. And all of a sudden, we start this little move here where we're creeping up. But notice that the tricks starts to get volatile again, where it angles up and we see a gap between the two lines. And so we come up and then there is a crossover. This is a bearish cross. When the fast line crosses over and goes underneath the orange slow line, that's a bearish cross. That would coincide with this little peak right here. So we were trending up, we moved up to this point, and then right there is where we pivot. And that pivot coincides with this little crossover right there. Now, let's scroll in and see what it looks like as we move the bars, so we can see this volatility here a little bit more clearly. So during this sailing downward of price here, we see that we've got that flat area, and then all of a sudden the lines open up as we had this strong move upward here. Now, even though it crosses over here and price goes down, we want to see volatility. We don't want to see a flat line on the price line and also on the tricks. So the tricks and the price line are moving now, and that's a good thing. And as we zoom in, what do we notice on the tricks? We see that the fast line is starting to flatten out at the bottom and it's approaching the orange slow line. So we see the orange slow line is kind of moving down and they're getting closer together. So that gap between the two lines is closer together, which means that they will probably end up crossing over. So you're going to see something like this happen. There's the white line, and then our orange one is going to do something like this. And then that crossover is going to coincide with a strong upward movement. Now, when we look upstairs at the price, once we have this crossover happen, which is coming because we have a nice strong movement in this channel right here. Let's clear that line out of there and make it a straight line. So here is a trading channel, and this channel is moving up. That's what I call a swing channel. And so since this crossover hasn't come yet, that tells me that we probably are going to print more green bars up here. We're going to have a few more of these and continue this swing channel because then the white line is going to be carrying out on the top. So that means that this current price of $675 is probably not a good point for me to sell. I would want to be looking to at least take out this last peak, which happened at 760. Okay, now we might not make it up there, but if I'm going to take a chance and roll the dice and gamble, I'm going to make the educated guess that this channel will make it up to that previous high point at least, or go up above it. Why? Well, I'll show you why. Let's zoom a little bit more of this in, and we're going to illustrate a point here. As we had the distribution going on, what do we notice? We notice that there is a series of lows. So let's say you've got a low point right here. Okay, let's make a thinner line there. Here's a low right there. And then we move up and then we start sailing down, sailing down, sailing down. There's a lower low. Then it moves up. Then we start sailing down. We make another low. Then we move up. And then we start sailing down again. There's another low. Do you see where I'm getting at here? Move up, sailing down, another low. Move up, sailing down, another low. So what we have here is a series of lower lows. Each time we go down and make a low, it goes further south than the one that preceded it. We can even do the same with the high points. We had a peak, up here. There's a high. Here's another high, but it's lower than the last one. Here's another lower high. Now this is a higher high, but we got faked out because the next one was lower along with the next one. And then here we have a higher high. Okay, so let's connect the dots on the series of highs. We have a high, lower high, lower high, faked us out with a higher high, then two more lower highs, and now we have a higher high. And Here is the main one right here. This is our first higher low. Okay, so let's connect this dot with the green arrow and say that now we've moved and we have made a higher low and we have our first higher high, so we could make this one green, but we have plenty of previous high points that we have to take out. So if this move in this current channel is going to be successful, I would say that it needs to take out this high, and that price is going to have to trend all the way up until we create a higher high. And if we do that, then that's a change in the trend. And that says that the bottom is in, and then we can have our little smiley face. Here's our cup on the bottom. It cups on up, and then it starts to move up. And then once we pivot again, we'll pivot down, but we should make a higher low. And then coming out of that pivot, we should move on up and make a higher high. Okay, and we should see this continue on as we start a new market cycle. Now, it's way premature to say that this is a market cycle change, because I really don't think it is. But in the micro sense, I have enough evidence here to say that I'm going to hang on to this fella and not swing trade him until I see whether or not we take out this previous high point. If we don't, oh well, I lose. If we do, and we make it up to say 758, 850, I'm going to sell it. Because then I can wait for the next pivot point and take a chance. As long as we're not rolling into the next bull market, there will be a correction, and then I can decide where I buy it back, and then I'll be sitting on some free gems because I'll buy it back for a lesser price, and then I keep the difference between this high price. Let's make that in white so I can see it. Here we go. This would be the price that I sell and the price that I purchase it back. So when you do the math, let's say I buy it back at 850, or I sell it at 850 and I buy it back at 600. Well, I got a free 250 gems minus the little sales tax, not sales tax, the commission, royalties. That's what I'm trying to say. And so this is my strategy to gain gems during this boring time while we're in a slow market. That's how I multiply the gems in strategy 3.0. So we'll watch and see how this plays out. And this is just one of your better charts. I really like this chart because it's easy to see what's going on. I love these candles. Man, it's beautiful. So we can come through here and we can designate these swing channels. Here's a downward swing channel. When you connect the dots here, as soon as you break through the upper limit, you can say, oh, this is a swing channel change. And then this starts a new swing channel. So let's make one right here. So you draw that in. And it's rough. And then as soon as you break through the bottom of it, like you did right here, well, by goodness, that makes a new swing channel. So we draw one in here. And we see that this swing channel was broken at this point as we poke through here. Now, if you can get really good at buying here, selling here, buying here, sell up here, well, you could be a rich person. It always doesn't come out where it's this easy to see, but when you combine these indicators like the tricks and a few others that we won't get into on this video, you can be successful. Let me know if this video was helpful and if it was beneficial for you in making buying and selling, flipping decisions. I'd like to hear about that. Post it in the comments below. And also let me know if there's another holy grail that you would like to see me do a chart analysis of, to run some TA, technical analysis. That's what that's called. And I would love it if you would like, comment, and subscribe. And as a matter of fact, tell a friend about the Crypto Pro channel. Pass the word. And if you would like to help me to defray the cost of producing this channel, you may do so by submitting a super thanks. And I thank you in advance for your support. That's all I've got for now. This is Carlton, and I bees out.